gold is analog, Bitcoin is digital. We're moving toward a digital world. And, the bottom line is that when Bitcoin came along, what they invented when they solved the mathematical problem that allowed, that stopped double spending and allowed a fixed number of something digital to be controlled and audited every 10 minutes. When that came along, it changed the game. I mean, even gold, as sound as it is and as good as it is, we increase the supply by 1.7% every year and above ground. And in 45, 50 years, we'll have twice as much gold on the planet. So, Bitcoin, there will only ever be 21 million. So it's a natural deflationary money. I believe that it has the potential to be the base layer of money because it's easier to verify. It's easier to move. I mean, moving gold around is hard. Verifying gold is not simple. There have been counterfeit gold bars, etc. And, basically, it's not transparent the way that the Bitcoin ledger is transparent. And so that's the biggest difference, I think, between the two. The other thing that's going on that I think is going to drive the value of Bitcoin so much higher, everyone who wants to own gold, I mean, gold's been around for 5,000 years. Everybody knows what it is. Everyone knows it's money. It's the base layer of money. But, because of that, it's very widely distributed. It's not like it's some great secret. Yeah. Bitcoin is an emerging challenger to gold. I call it digital gold. I think it really does have the properties of gold, but it has some other properties as well. The transferability and the way you can see it on the ledger. It allows, Bitcoin is undergoing an adoption curve, and as you and I both know that, not everybody in the world owns Bitcoin today. In fact, a small fraction of the world owns Bitcoin today, but I believe that fraction will grow as more and more people come to appreciate its monetary properties. And so, in my opinion, Bitcoin will someday perhaps be the base layer of the monetary system. And it's interesting. I'm not the only one who said this. I don't know if you saw it. It was on Twitter yesterday. Larry Fink at BlackRock, they just wrote their annual report and they said that, Bitcoin is actually a challenge to the reserve status of the US dollar. And I thought, BlackRock's one of the largest asset managers in the world. And here they are actually saying what I believe. I thought, boy, that's interesting. And so, I think it's important. I really highly suggest people who are skeptical of Bitcoin that they read my book and try and understand the argument that I put behind it. I do believe it's the most asymmetric thing I've ever seen. And more importantly, I think that, a lot of the reasons it's been demonized have to do with kind of the crypto, Sam Bankman-Fried, arm waving, promoter, rug pullers in the whole crypto space. I mean, look, gold people are very sound-based people who tend to be quite conservative, and they don't fall for bullshit. And so the average gold person, I think, and I count among, I have many average gold friends. When they look at Bitcoin, I know the reaction is, oh, that's all just arm waving and bullshit. And I say, well, it's a little more complicated than that, or it's a little subtler than that. All the crypto stuff, you're correct. You're dead ass right. It's rug pulls, arm waving, bullshit, fraud, Sam Bankman-Fried. When the guys who invented Bitcoin, whether it's one guy or a bunch of guys, we don't know. But when Bitcoin got invented, what they did was they created absolute digital scarcity. You might say, well, why does that matter? Well, it actually does because it's provable, verifiable, provable, auditable, visible digital scarcity. So for the first time, really in the history of mankind, we actually have a form of money that will not be diluted. We've never had this before, ever. I mean, even gold gets diluted. So that's different. And I think it means that one has to think about, what does that mean? I mean, it'd be like asking a caveman, what does an airplane mean? I mean, he doesn't even necessarily know how to conceive of what flight is, and the notion that we're going to have a Concorde going across the country, across the ocean in 3 hours, that's way beyond his imagination. And so, I'm not even sure any of us really know exactly what Bitcoin means, but what it does provide is this is a ledger that is completely truthful, honest, and mathematically based that anyone can see. And I think the implications are going to be really big for money and for other things too. So, I really highly encourage people to throw off their skepticism or throw off their, the taint that crypto in general and the crypto bros have brought to this whole area, and read some of the Bitcoin maxis, read my book, read Lynn Alden's book, read Saifedean Amos's book, and try and understand why this is actually a technology and an invention that, to me, it's like, I was a big investor in the internet, and it really reminds me of the internet. I mean, and it's parallel. I mean, it's actually the monetary version of the internet, right? So, adoption, all of it, the skepticism, People were very skeptical of the internet in the beginning. You remember Krugman saying it's no better than a fax machine. People don't have anything to say to each other. Who needs the internet? That's what he said.
I mean, I've heard you debate on stage about this. We were talking about it with Peter Schiff down in New Orleans when I saw you. I mean, some people would argue, Bitcoin has dropped 50, 60, 70 in past cycles. So for those who see volatility as a liability, why should they trust it as a store of value in a crisis?
It's a totally great question. What they've got to understand is that it's very early days and it's emerging. And so on very good days, it's going to the moon and we can't stop it. And on very bad days, Bitcoin is dead. And, Amazon is up 218,000% since the day it went IPO, and yet it went down 50% on a regular basis. After 08, it went down 90%. And so when you've got something new, untested, emerging, unproven, you have emotions run high in both directions. We got to have it. Let's push the price way up. Oh my God, it's not working. There's a risk to it. Let's throw it the hell out. And so, so yes, it's highly volatile. And for a lot of my clients who don't like that volatility, I say, fine, stick with gold. You'll be fine. You'll be protected. But what I try to suggest to all people who I speak to is the way one, as an investor, the way one deals with volatility, especially if it has a strong upward skew. And you're right, it's drawn down 50%, 70%, 80%. But guess what? It then comes back and goes on to make a new higher high. And in each drawdown, the low that it hits on that drawdown is above the prior low. So it's trending up with a lot of volatility. And in my opinion, the way an investor deals with that is your allocation size. So, would you want to put 100% of your money in Bitcoin? Of course not. That'd be crazy at any age, right? But, if it's got a positive skew over a bunch of years and you believe in the concept, can you take 4% of your net worth and put it into an asset that'll go down 50%? Sure, because you're not likely to sell it when it's down 50. You'll just hang on to it knowing that it'll eventually go higher, and so that's really, in my view, the way that investors should deal with the volatility is their allocation size. They should put into it what they're comfortable having in an asset that they know can go up a lot more than gold, but they also recognize can draw down 50%, because gold has never drawn down 50% in a year or in a cycle. A big drawdown for gold is 20%, and that only occurred right after the 1980 bubble. So in general, gold is up, 65% of the time, gold is up up on the year. And then the other 1/3 when it's down, it's not down very much. So
we need to talk about gold. It's clear that there's a historical movement happening in the space. We talked about it's crazy. The precious metal just had one of its best quarterly performances since the 1980s. It's currently trading at a new record high above $31.50 an ounce. And we're seeing central banks consciously choose to step up their gold purchases as they increase the share of the precious metals in their reserves. Talk to me about what's happening in the gold market. I need your thoughts on this. You're one of the few ones that aren't comparing Bitcoin and gold here.
Yeah, you see it and I see it. We know there's been a lot of physical move from London to the US. I'm not sure what that's all about. Recently, just this morning, there was announced a huge purchase of futures that look like they intend to take delivery on them. There appears to be a little bit of a scramble for gold. It appears like we're entering a gold bull market. And, it's quote unquote on. Now, that doesn't mean we won't have drawbacks. Of course we will. But, I think that what gold is very good at doing is sniffing out future monetary debasement. It did it in 2018. It started moving before COVID. And then COVID came along and it really moved. And so I think what gold knows is that the monetary system is broken and that governments will sooner or later be forced into printing money. And it's just front running that move. I think these big buys, by the way, they could be governmentally driven, but I actually tend to think that if you look at it, Jeremy, there's about $950 billion in quote unquote wealth worldwide if you add real estate in there. So call 450 of that, bonds, stocks, cash, art, all that kind of stuff. The other 450 is real estate. A lot of that wealth, I think, is kind of thinking, they're printing a lot of money. There seems to be inflation that might continue. Monetary debasement's a serious risk. Maybe I should own some gold. And the gold market, by comparison, is tiny. The total market cap is about 20 trillion, but really only about 10 of that's available because the other 10 is either in a central bank or on a lady's neck or, in a museum. So it's actually less than 10. It's more like 6 or 7 is available for purchase. So 950 trillion in assets a sound money market for gold of 6 or 7 trillion, well, even if only 5% of the 900 says, gosh, I want to protect myself, that's 45 trillion dollars. And, that's chasing a $7 trillion market. So what's that going to do? That's going to push that gold price up, right?
Yeah, yeah. And a lot of people are buying, as you mentioned. I mean, the inflows right now are just crazy. I got to talk to you. It's interesting because I got close to the end of the book here, and you close the book with a bold vision: abolishing the Fed, ending a federal deposit insurance corporation guarantees, and letting the free market determine money. Some people would say that this is radical, but explain a little bit. I mean, why do you think that this is the only path forward? And what gives you the hope that we can actually get there?
Well, I mean, the hope that we can get there, I'm absolutely convinced we'll get there, because I think human beings trend toward the best thing for wider societies. The time frame, well, that's a little bit more debatable. Can we get there quickly? I don't know. Look, it does sound radical to people who've been steeped in the Keynesian lore of we need all these great wizards to tell us how to run our economy, but we really don't. I mean, if banks get overextended, they should fail. I mean, we should go back to the early 1800s, and earlier 1900s before the Fed, and the model we had, which was just capitalism. And there'll be banks that'll be very well managed and well run, and they'll have a lot of trust, and they won't need FDIC insurance. And, if you want to run a risky bank and pay a higher rate of interest, fine, you're welcome to do it. But if you make a mistake, you're going to go bankrupt, and your depositors are going to suffer a loss. I mean, that's to have the government try to kind of quote unquote socialize the losses for all of us. It unfairly incentivizes people to do stupid shit, and then we all pay for it. That's the problem. And so all I'm really advocating is rule of law and fairness across all of these different domains, so that nobody has a particular advantage. And, if you do something extremely well, you'll be rewarded. And if you don't, you get over leveraged, you get out over your skis. I mean, by the way, this would eliminate so much of the kind of gambling and just the nonsense that, everybody in the fiat world, when your money is melting like ours is, what tends to happen is you tend to behave in a way, you play the lottery, you feel like you have to do crazy, aggressive, risky stuff to stay ahead of the debasement. Do you know what I mean?
Yeah.
Whereas in a sound money system, who gets rewarded are the people who actually are conservative and save money. And that's how it should be, because it's that saving money that provides the capital to improve the productivity, to make the system more efficient, to make us all have a higher living standard. And that's really the goal, isn't it? I mean, the goal is to have everybody's living standard improve. The goal is to have everybody live better than they have their kids have a better life than they had, because productivity and technological gains have improved the world. And that we can attain that goal, but it's going to be very hard to attain that goal on fiat money.